Good evening, everybody, and welcome to another edition of Live Market Analysis, coming to you live and steamy from the hottest place on the planet right now, over here in Perth, Western Australia, at 40 degrees, where I am today, 42 in the hills, a balmy day in March. Let us do the disclaimer before we get too hot under the collar. It says that everything we're going to discuss this evening is general in nature, has not taken into account your personal financial circumstances, objectives or needs. So before acting upon any of this information, you should consider it very, very carefully, determine its appropriateness for you, or if you're unable to do that, seek the help of a financial professional to help you. It's always important to remember that markets go up, markets go down. We've certainly seen that over the last few weeks. You could lose money because trading and investing is risky. Ultimately, it's you, however, who makes decisions about your money and not I. So you're responsible for everything that you choose to do. Let us get stuck in tonight to your requests. Ask me about the stocks, the bonds, the commodities, the crypto, the indices, anything you're interested in that I can get a chart on. I'll do analysis for you. It could be anything about trading. We've got a couple of questions tonight that aren't specific stock related. They're more general in nature. The methodology, the money management, or the mindset. I'll give it a go. Let us start off, as we always do in these sessions, by heading over to our portfolio management model, our trusty, tried and true portfolio management model, which, don't quote me here, but off the top of my head, I think I said, I don't think I said anything on that day. I think it was kind of, oh, that doesn't look good. We'll wait and see. I want to say, I don't know, around here, or certainly around here. Definitely we're at a third off by then. I even want to say by that one, we might have been down to 50% or a third. And if not by that one, we're at a third now. I don't know, go check the tapes. It's roughly then. But the bottom line is, we get all the way down here and here and here and here, and we don't have a full risk position. We've got our minimum risk setting, or our maximum conservatism setting, if that's the right way to put it. And a lot of people will say, hey Carl, look, you said in tonight's wrap up that you think that the bottom might be in, to quote Lloyd Christmas from Dumb and Dumber. So you say there's a chance. You think there's a chance. Yeah, there is. Of course there is. And it's one of those times where, look, it just doesn't mean a whole lot, really. We're not going to change from our current most conservative risk setting. We stay there, but it might give it, this idea that maybe the low is in. That candle, I think, is supportive. I think the Aussie market looks a bit better. And together, those concepts are convalescing to suggest to me that, look, there's, I think, a better than even chance. And that's the order of magnitude, ladies and gentlemen. Better than even chance that the low is in, and we'll go up. And where we're going to go up to, I don't know, 18,605, maybe there. Are we going to go to 2205? I wouldn't have a bloody clue. I'm not a prognosticator. Obviously, the higher up you ask me it could go, I say, well, probably the less likely that will be. Very likely we might get to 18.2 and go test the bottom of the trend ribbon. From there, I don't know. Low is in for now. And I guess it allows you to move up to the top edge of your 1/3 risk amount. I'm never all in. Actually, that's not true. Often I am all in, but I'm never all out. It's probably the better way to put it, because there's always opportunities, and we're going to find plenty tonight, both here and in the USA. So we can, have a bit of risk in the system, I think. And the other reason why I think this, and I mentioned it in tonight's update on market index, is that I think the consequences for getting it wrong aren't that severe, in that, beneath 17,238, we know that's wrong. So it's one of those, I think, asymmetric reward to risk situations where our reward is far greater than our risk at this stage, because we've got such a clear delineator between, ultimately, and I can't understate this, between bull and bear, because beneath 17,238 we have effectively broken through the long-term uptrend ribbon, which is now obviously neutralised, and therefore I think with these 1, 2, 3 candles have, I think, fair enough, tested that long-term trend ribbon, and therefore if we have broken through 17,238, it is acting as an area of dynamic supply, which that is our exact definition for a change of trend from up to down, okay? And we talk in those terms, right? We talk about, well, long-term uptrend, equilibrium trend, long-term downtrend. And if we go outside of our little live market analysis bubble, out to where the ignorant, unwashed circulate, they would call that a transition between a bull and bear market, wouldn't they? So you can use that language if you prefer. Let us go to the Aussie market now, which I called, like I said, the low might be in on Thursday. So that candle then, you can all see why you'll know my system. In that, surprising for me, I wasn't expecting it. I must admit that we actually put in some decent candles. That's a great candle. That is the candle you want to see in this horrific downtrend, because it shows that supply is back in business. It shows sell the rally, all that stuff you'd associate with the candles that came before it. And the reason why that's so good is that this one comes in after it, and it tells you, hey, okay, actually the supply side is not as much in control as we thought. Because we've actually closed very, very close to the top of that shadow where that supply started. So we could infer that actually we've consumed that supply. Like, how else could you get back up there the next time if it is not the case that the supply no longer exists? Or, at the very least, they're backing off, and they might have another crack between 8,100 up in that long-term downtrend ribbon. So again, I think fairly asymmetric sort of payoff here. And this is the whole crux of it, ladies and gentlemen. We're not going, hey, bang, all the chips back on the table, that's low. We're going, okay, well, we can use all of our 1/3 risk level. And it won't be until we're trading above that long-term trend ribbon with some really nice candles of price action that we can start to move then, say, to a half or maybe 2/3 from there, because that's just the way I operate. I cannot pick the bottom. If you had hoped to come and listen to somebody on a Monday night who is able to pick the bottom, unfortunately, you've come the wrong place. For me, it's varying degrees of risk around the technical parameters that we can see. Okay, let us see if there's anything to push us off this thesis of 1/3 invested, but all 1/3 on the table, because there's an eensy-weensy chance that the low is in. And we're going to kick over to the Russell 2000, which is over here. And is that the definitive, clear-cut end of the downtrend? No, it's not. It's just as tentative as the other ones. Is it better? So maybe it's slightly better than the Nasdaq. Slightly better? No. Well, I shouldn't say no. There is an upper shadow there on Thursday, wasn't there? Look, slightly better than the Nasdaq. Probably not as good as the Aussie. Somewhere in between, but not a definitive signal that that's the low. If anything, though, I mean, it has come from an area that has been associated with significant demand in the past. So not a smoking gun, but not enough to dissuade us from being fully invested up until our 1/3 limit. Heading over to Europe, where a lot of money flowed to Europe once Trump started spouting his mouth off and his tariffs off as well. Come off the boil a little bit, but still very, very strong. And bigger picture, strong European markets, it's all good. It's not a bad thing at all. It just shows risk-seeking behaviour. If a major calamity was about to befall the global economy, then European stocks shouldn't look this good, because it would, under no circumstances would the money have piled in there. They would have gone to cash instead, and we would have seen a more simultaneous unravelling of markets. We haven't seen that, so that's encouraging. Keep that in mind. Spain there as well, telling us that, look, if there is a global calamity, right, Spain would be caught up in it. So that's encouraging. And so is that, to be fair, on the Hang Seng. The Nikkei did get tagged a bit more as one of those markets that has more to lose than to gain from Trump's trade policy. That one was already in a downtrend well before any of this started, but encouragingly has actually rallied back up to the short-term downtrend, and we're not seeing anything to answer my own question. We're not seeing anything here to push us off this idea that we can be 1/3 invested at this point in time. Just quickly looking through the ASX sectors, and we obviously have seen some significant damage here to the point where trends have neutralised in many cases, but in some cases have reversed. That is one that is on the verge potentially of reversing. Some decent candles there at the end and moving back into the long-term uptrend ribbon. But if it does push down from there, then that would be a reversal of a trend. This trend was stuffed anyway. Let's face it, I think that's the technical term. And it's just about as stuffed as it was before the Valentine's Day correction. This one is probably looking more like a change of trend, isn't it, than just an equilibrium. But we will give it the benefit of the doubt. Certainly a rejection of that long-term trend ribbon would make it beyond doubt, the financial sector. That's all your big banks have changed direction, and that would be a problem for the low is in guess. It's nothing more than a guess, because we cannot go up and make a new high without the banks. It's just impossible, because the resources, as we're going to see, still look pretty stuffed. So how else then could it possibly happen? It can't. Gold still looks fine, but gold is a fickle beast. We know that anything that resembles the slightest of a pullback in the gold price gives us an outsized pullback in our gold stocks, and it's very frustrating. But it's a high beta play, is what we call that. Healthcare has turned the corner. Of course, we know the CSL, Cochlear, and a few of the other ones looking pretty awful. That one has turned the corner as well. And this was one of the big drivers of the bull market prior to the Valentine's Day correction. So that's disturbing. It makes it harder, I think, to stick with my thesis. Materials also. Not that we needed it in the bull market beforehand, did we? But it would be nice to have it. It doesn't look like it's happening there. Resources obviously very similar. Property trusts have turned the corner. Now let me think about this for a second, because they are bond market proxies. If we look at bond yield charts as we're about to, there is a chance that they could crack, and lower bond yields for a bond market proxy should be helpful, shouldn't it? I don't know. It should be. Staples, that's a bit of an ACCC investigation thing going on there, where the ACCC, ladies and gentlemen, we all go to the supermarkets and we were never gouged. It turns out, you and me, we were never gouged. It was just our imagination. And the telecommunications sector there. My wife told me tonight, she said, Carl, I paid $8 a kilo for Granny Smith apples. There is a Granny Smith out there somewhere, and she's rolling in her grave at the thought of that. Telecommunications sector actually looks okay. It's holding its long-term uptrend ribbon there. And utilities looks okay. A bond proxy, that one makes a little bit more sense. And that's it. We could look at stuff like, well, we will, like the base metals. And again, if the world was about to come to an end, these wouldn't look as good as they are. So that's interesting as well. Aluminium still looks good. Copper looks fine, looks good. It looks better on the other chart, but that's okay. We'll skip iron ore for now. We'll look at it later. We noticed last week that nickel had actually gone up, but is not yet in a long-term uptrend, but trying to turn the corner. Lead looks okay, pulling back to the long-term uptrend. Hopefully it does bounce off that. Tin is probably still the best of the lot. Probably it is, and zinc it's not awful either. We saw during the week, or on Friday at the very least, we saw lithium breakdown. In fact, it was Thursday. And you can't get that chart anywhere else. It doesn't exist in space and time. I'm the only person on the planet that charts it. And I've taken it from literally day dot, and nobody else has that. Isn't that interesting? Why? A bit of a hobby. Lithium's a hobby for me. I called the top back in 2022 or whatever it was. And I just wanted it to be a teaching exercise at the time for that current generation of bubble lovers. And hopefully some of you probably started following me around then as well, and that's how you came to know me. The reason why I've stuck with it is because I want to call the bottom. I honestly didn't think it would take this long, and I feel it's going to take a lot longer, but I'll be there to call the bottom on lithium at some stage. Let us head over to the Chrome screen, where I have some exciting news for you tonight. Of course, you're all using the indicators now. Either you've got your optimized true range up here. You can see above and below average volume. You can see above and below average volume, and your relative strength comparative as well. And I've got a surprise for you coming up in a second after we go through this stuff. Silver still looks fine. That's as far as I can go. And I always said it's a distant second to gold. Gold's still number one. And there's a little bit of a pullback underway, but it doesn't really look sinister. I covered it in tonight's ChartWatch on Market Index if you want to read about it. Copper still looks very good. In fact, it looks much better now than I looked at it a couple of hours ago. There's a live candle at the end there. You might go, oh, that's a great candle. I'm really excited. Don't get too excited because it's a live candle, and therefore we must discount it. But even on the last couple of candles, it still looks very, very good. Obviously up around here at, I don't know what that is, 30 something and some change. That's the big point of supply, probably the big target for this run. Do I think copper can do something really amazing? I'm going to say honestly, no, I don't think it will, because it'll disappoint us. Mark my words, copper will disappoint us. But it is kind of possible that we might want to subscribe to this next big thing idea, because if we zoom out a bit, it's kind of, it's kind of a big level, isn't it? It's a big consolidation pattern, this 530-ish. I know that's a back-adjusted chart, I know. But so none of those prices ever existed in the history of mankind. But as technical analysts, it's the best of a bad situation when it comes to charting futures, all right? So we do use them, and they're valid, okay? Because all of us technical analysts who use it on futures use the same method, so it's valid, even if it's wrong. But it could be something pretty amazing if it does get through. Anyway, we should keep moving because I'm not a prognosticator. I'm a trend follower. And following the trend on iron ore will put you to sleep. Nothing doing there, and nothing doing, unfortunately, on uranium. But somewhat exciting in that it is another beautiful example of how commodities work, ladies and gentlemen. They go from boom to bust. And at the moment, unfortunately, this one's in a bust phase. Don't take it personally if I'm calling uranium down or I'm a bit bearish on your favourite uranium stocks. Look, first of all, I don't care, honestly, how you feel, unfortunately. But it is not because I care about the stocks. I just care about the trends. And it's not directed at you personally. Crude oil and Brent crude are going sideways very quickly, and coal charts are going down. Let us finish off this whip around the grounds by heading over to our bonds, all-important bond market. The price of money determines the price of everything else. And I haven't looked at this this morning, so my first look since Friday's candle, and a bit of stabilisation there. We have talked at length in these sessions that we don't want to see this collapse. That would be the worst case scenario. And just hanging around here is fine. Going up very, very, very gradually is fine. That's counterintuitive because typically stocks don't like higher rates, but gradually implies that the economy, US economy, other economies aren't going down the toilet, that the Fed won't have to dramatically cut rates, and we automatically think, lower rates are good for stocks. That's not always the case. So they're fine. They're benign. There's nothing to see here. Keep moving. Certainly there. Okay, let's show. Now we'll just do the case study now because it is one of the offline requests, and I have to do it at some stage. And I'm trying to find it here. Yeah, it's from, I think David asked me about this. Wasn't it you, David? Let's go to, no, it wasn't. No, it was Roscoe. Roscoe asked me this. Ross, this is yours, your HLI, which is Helia Group. Of course, had a big drop today. Very high probability they're going to lose a big contract, massive part of their business that they had with CBA. And we saw that fall today, which, and Ross said, was there anything in it before today's decline that we could have used to tell us that we should have been out? Just checking your online request to make sure there's no technical difficulties. And, what I would normally do here, what would I normally do? I'd start drawing in peaks and troughs and all that sort of stuff, and I'd probably have to fidget and fart around with the lines there. But I don't have to do that anymore. I can go to this capitalism price action, points of demand, points of supply, and they automatically plot on the chart with labels that tell me what the peaks and troughs are. Now, ladies and gentlemen, I've been trying to do this for well over 10 years. It's very, very hard to do because you can only plot these retrospectively, okay? And it's really only with the advent of artificial intelligence, and I've been having a long chat with artificial intelligence on how to solve this problem, and artificial intelligence was able to crack it. So I'm very happy with these. I've still got some tweaks to make. It's not operating exactly the way I want, but it's doing pretty well. So you won't get it this week, maybe not next week, but it's near. It's near future sort of stuff. And the good news is that you don't have to draw these bloody peaks and troughs in. And we can start to see straight away, well, the trend has changed here. So not that candle we didn't close beneath that trough there. That trough there is 517.70, whatever it is. And this one here, everybody seems to be pretty happy with that. That's good. And that candle there is based upon our model that we would start to think, well, can I, in good conscience, continue to hold a full risk position here? It's not about, well, let's jump out, because prior to that, the trend was very good. I know it's going to clutter things up. Now, you're not going to have all that stuff on all at once. You're not going to go through, for example, you're not going to go through your scan list with all that stuff on, are you? Because that would be silly. Like, what would be the point of that? You can't see the candles, okay? So it's a matter of only using it when you get to that fine detail, okay? And then I think we got to go, no, we got to go here, object tree, and then you can hide it here. Oh, I just turned it off, didn't mean to. And so you're going to do your scanning on this basis, and then it's only when you go to your really fine detail, even for selecting trades, you don't even need it that much. It's more about, well, where do I set my stop losses if I'm doing it that way? It's more for your open trades, isn't it? It's more for your open trades, and that you don't have zillions of those. So yeah, use it on your when you're doing your follow-ups. Let's go back to HLI and do this case study here for Roscoe, and we'll turn those back on over there. Okay, so if we zoom in, we can see very clearly that this candle here was our first signal to take some risk off the table. You might have tuned in at 3:45 on that day, or 3:50, made that decision and got out at the end of that candle, or you might have got out at the start of that candle. It would have made a huge difference. I think then when you saw that candle, you're probably thinking, again, look, I really want to have even my 2/3 risk position. And for me, that's kind of a second, third there, because that candle is really definitive. And then very happy after that to see how it goes. You know, the trade was a good one prior to that. It was an amazing one prior to that. So happy, I think, to run with a 1/3 risk level and just, we were at this stage be thinking, well, could double bottom, good candles here and have another go. Then I think we get to, we make obviously another lower peak. We get to this one here, and I don't know, what do you think? I'm probably talking too much. I want you to have a look at this and make your own mind up. But we've closed beneath the short-term trend ribbon. We've now got, 3 lower peaks and 2 lower troughs. And yeah, we've definitely closed beneath that one. We had, for me, I don't see how you could be full risk position after. I don't see how you could be any risk position after that. And then hopefully that's the case for here. Look, at most you might have had a third, on the basis that you were a bit lazy or a bit trusting on that candle there. So Roscoe, I think there was plenty of warning in here that we didn't need to be full risk position. And look, a third risk position is better than a full risk position at this stage, isn't it? So I think that's a pretty neat little case study and a nice little introduction to our new indicator that, leave it with me, I am working on at this point in time. Okay, good stuff. Let us keep moving to done Ross. I'm going to delete you, Ross. Let's go to Mick. Mick's got TTT. I'm going to head back to Amy Broker, because that is still my native environment, and I can't do it in Amy Broker. Amy Broker just doesn't have the functionality, or at least I haven't figured out how to do it yet. So yeah, it might be the case that we do end up doing a bit more work over the other side. Let's go here, and not that that matters to you because you don't have Amy Broker. Let's go to TTT. Thanks, Mick. You know that I can't get to TTT. Let's go TT anything and then scroll down, because Amy Broker won't let me select TTT. And the question is a minus 1/3. And look, I can see why you might say that. That last candle there is frightening, isn't it? Otherwise, it looks fine. I mean, take that candle out of it, and there's very little to tell us that the supply side's in control, that the demand side isn't still in control. Certainly, we have a point of, now I've got to be careful what I draw, because I don't want to draw over there, because they're the charts I use for market index, and I don't want to muck those up, so I'm going to go here, and these charts are only for us to look at. Last time we looked at it, would have had, today's the 24th, so 17th we would have had that candle. So that candle there, that one I had, and we said FRP, there's no reason to say anything else. And none of those are all that sinister. I mean, if you're worried about this one, Mick, then you would have been worried about that one, and that one wasn't. I couldn't select it. That one wasn't anything to worry about, was it? So I'm in the boat that this one isn't anything to worry about. It is bigger, I know. It's frightening, I know. But it's not going to push me out of any risk at this stage. What would get me more concerned is confirmation of that. Another very similar candle, and then I think I would have to give up, certainly if it closed beneath the short-term up trend ribbon, and depending on how you feel, 1/3 or 2/3, but certainly not holding a full risk position at that stage. It's a little bit frustrating, not surprising though, given that this one is going to be a bit more susceptible, is probably the right word, to the supply zone around here. It's pretty clear cut, isn't it? So that is sometimes the problem with these ones where you've had a pullback, you've hit the long-term uptrend ribbon, and you're trying to go then best that previous major point of supply. But I'm okay for now. I think you're jumping at shadows. I know gold had a pullback today, but just as likely gold price heads up today. And this one's back on again. Okay, let's go to Mick's got a couple of others. ARN, which is probably looking in a very similar boat, but more problems here, I think. Obviously, a cluster of black candles, far more severe, slicing through the short-term trend ribbon, and then the short-term trend ribbon beginning to act as a point of supply. Today's candle certainly bucking the trend. It wasn't on anything all that amazing in terms of volume, so I don't trust it just yet. It's still important, but I don't trust it yet. And a bit of a upper shadow to boot as well. What today does give us, I think, is a very solid, and we talked about this idea before, this asymmetric reward to risk. So happy to hold. That's taking risk, isn't it? Holding is risk. But knowing that beneath here, it is like there is. I'm going to say there's no way, no path to any risk position. I was going to say no path to having any risk, which means, why don't we just say ZRP beneath here. So, yeah, that one is far more frightening to TTT. Let's go to SMN, which is maybe for a turnaround play, I think. Well, actually, so Mick was asking about their last one as a turnaround play. Well, is it a turnaround play? It's not really interacting with the long-term uptrend ribbon. It's not a turnaround play in the sense that it was in a big long-term downtrend. So I don't think this is really a turnaround play. I think this is more question mark continuation setup. And if that's the case, then it's not a very good continuation setup. If you get my drift, it doesn't have a very strong short-term uptrend. The price action is cactus, and the candles are not predominantly demand side. If anything, they're still showing strong signs of supply side control. So it's not a turnaround play. No, I disagree with that. It's not even a continuation play, or if it is, it's not a very strong one. So could I add risk to this? No, I actually thought, I misinterpreted. I thought we were talking about maybe getting out of it. So it's that close to ZRP. It's hardly encouraging, therefore, for FRP, if you get what I mean. Let's have a look at the next one. This one obviously is not a turnaround play either, because yes, whilst we are in a long-term downtrend, it's still a long-term downtrend. That trend ribbon needs to turn amber at the very least. We need to ideally interact with that trend ribbon, see that it has transitioned from an area of dynamic supply, which it has proven itself to be in the past, to dynamic demand. It's far away from that. Need to dink in that zone. Short-term trend's not up yet. The price action is okay, and the candles are okay, but we're missing so many factors for turnaround plays. I think I need to do like a one-pager PDF that people can stick on their wall somewhere, because we seem to be still getting this one wrong, but not a turnaround play yet. Is it an aggressive setup? No, it's not that type either. It's because they're long base patterns. They're moving up after a long downtrend, and you're trying to effectively pick the bottom. This is just a little bit of a rally in a downtrend that is yet to be proven, and until it's proven, there's nothing else I can do with it. Let's go to Peter. Peter's got AAI. Alcoa, okay, well, what are we doing with this? Continuation setups for a short trade, perhaps. I'm not sure, he hasn't said, but that's all I can see. I can't see a continuation for an uptrend or a long trade, because there's no long-term trend, because it's relatively new. Obviously, we had our old Alcoa or Aluminium Corporation, whatever it was, I can't remember now, it was AWC, wasn't it? But then got absorbed into big Alcoa, and is now dual listed here. So we don't have a long-term trend. The short-term trend is down. I can't see how this is a continuation unless we're talking about shorts. If we are talking about shorts, then look, I think there are better shorts, and I can show you literally 20 of them in tonight's short list, which maybe I'll do at some stage, but I won't do it now. So no, I'm confused by that one, Peter. Let's go to SX2, which I think makes more sense to everybody here, because this one is a bit of a continuation. Again, relatively new, I think in this case, because it's only recently listed on the ASX. But I put it in, I think I put it in as a feature chart, actually. Quite sure I put it in as a feature chart on that day. I don't mind trading things that don't have long-term trends. That's not a rule of mine. There's no rule that we have to have a long-term uptrend. I just need to see, good price action. I just need to be convinced that the demand side is in control. Oh, Carl, what's your system for getting into the market? Well, I need to be convinced that the demand side is in control. That's it, full stop. Well, how do you do that? Well, let me explain. But that was enough to convince me the demand side is in control, and therefore I'm able to be long. I still think the demand side's in control. Hey, Carl, how do you know when to get out? Well, when the demand side's not in control anymore. That's when we think about getting out. When the supply side's in control, we should be all out by then. I still think the demand side's in control, and therefore happy to run a full risk position on what I got. Would I buy some more? I actually thought about putting this in again tonight. It didn't make the shortlist. I just feel there's a little bit of supply here. Today's candle could have been better, maybe being a little bit picky. I don't think it's far off, though. So let me say FRP. And next high close, I would happily add some risk to this one. And that is a continuation setup. Yes, Peter. Let's go to Telix, TLX, where the question from Peter is it a recovery play? And I don't have a setup called recovery, but I think you might be referring to my turnaround setup. And yeah, I can see how you could call this a turnaround setup. We've got a bit of stuff going on here, don't we? We were saying in the past that, FRP up here, yes, well, it was looking fantastic there. Then we had a couple of scenarios that might play out. I think we certainly would have taken some risk off the table, no doubt about it, in that correction. And I think that would have been the right thing to do because we don't know what's going to happen in the future. I think at most, I think you're still holding 1/3. I think that's where you are at here. I don't think you got all out, but if you did, I don't feel so bad. Okay, well, I think we're kind of a third in on this one because, the trend is still overall very, very strong. Today I ran it, both in the shortlist and the feature chart. It is the feature chart out of the 8 that I put as feature, and there's the 8 there, that I had to think the longest about. It doesn't mean I wasn't confident, but it was line ball in terms of making a feature, just because I need to get rid of all this stuff because I can't do analysis like that. That's better. Just the amount of supply here. It's a bit flat through here. But again, I'm really, really being pedantic, I think, and a bit of a nervous Nelly. The reason why I put it in the end is because, I reminded myself, look, that the pedigree of this is unmistakable. There's some decent candles, shadow lows here, a confirming candle there, back into high peaks and high troughs. And today's candle is what did it for me at the end of the day. Friday's big volume, above average volume, is more than likely an options expiry issue or phenomenon. So I discount that, but still volume pretty healthy the last few days, and today not awful. It's average anyway. So therefore I said FRP plus 1/3 on that one. Well, it was going to be in the shortlist no matter what, but I made it a feature on top of it. The pedigree in the candle cannot be understated. And for what it's worth, here are the other ones. So Almonte Industries, I have no idea what these guys do. It hasn't. I would have had it so much earlier for you. Unfortunately, the turnover filter kept me out for far too long, and you can see here we've got zeros. But I did run it fairly recently. I mean, as soon as I could. That's the first day it appeared, so I ran it as a feature on that day. Some probably bit of scary stuff there. If you knocked out that third somewhere around there, breaks even or a small loss, well, so be it. And then I want to say even on that, in fact, I'm pretty sure I put it back in on that day, certainly put it in there, and it's gone in tonight as a feature as well. So FRP obviously plus 1/3 on that one. Next one is AMI, which is pretty self-explanatory. Look, there's a lot of paper out in this one, so it's going to be slow and steady, but you can't doubt that one as well. That's another copper stock there. APA, which I really like this one because it's a turnaround setup. And we need to have a bit of a mix, so you can see that, isn't it? Isn't that interesting? Textbook turnaround setup, good candles. I love this rally through here, the very shallow pullback, and today's nice candle as well. Again, options expiry there on the volume. So I think that looks pretty neat for what it is, for a turnaround setup. APE, should I label that? I won't label that. APO is just obvious, isn't it? It's a continuation now. It was a turnaround, but continuation. A little bit of supply up there, but we've been here for a while. I don't think that's surprising anybody. This one here, which is another gold stock, still looks pretty good. NPL, same diff as APE and Sandfire. Another copper stock there looking very, very solid. And we looked at Telix. We talked about continuation short before, potentially on AAI, and I don't see why you would favour something like that over something like this. And I won't go through them all in terms of discussing them all, but I'll just go down the list, because we talk too much on Monday nights about longs. We talk too much on Monday nights about things to buy. We don't talk enough in these sessions about what you can go short. And if you've been looking through my lists of featured downtrends, there are some trades in there that would just blow your mind. And this is a turnaround play here. BGL, obviously big black candle coming off that zone. So if we turn this upside down and we made all the candles, black candles white and all white candles black, and it would end up being a really fantastic long setup. And that's the only way, that's how you think about shorts is, well, it's just this will be a turnaround setup. It's like the APA setup, but upside down. Breville, CRN was one of those. You blow your mind. Incredible. I've run this as a feature chart, I think 42 times, and you could have shorted it any of those times and made some incredible money. Same with CTT, same with CU6. These have been in here for months, and some of them are half of what they were. So if you can imagine doubling your money on a long trade, well, halving your money here is the same thing, really, isn't it? But you're not halving your money. EDV, Elders. IPX is a fairly recent one, actually. It's starting to go very well. And the great thing is you can see that we rode this with FRPs and plus 1/3 all the way up. But trends change, and we're using the same methodology for our long turnarounds. I know I said that, but repetition is the mother of learning. James Hardie tanked today, but that's been in a couple, two out of the last 3 days. Johns Lyng Group, which I'm quite proud of, because it's one of those stocks that for some reason people with self-managed super funds tend to love. KLS is another one of those as well, like just so steady. It runs buses or something, doesn't it? I don't know. Who cares? Maya, NXL, how the mighty have fallen. And this is why we are not true believers in anything, ladies and gentlemen. And I hope you've put that well into your past, this idea that we can buy, hold, hope, and pray. You can't. PWH, been in there for so long. RPL, I think I started putting in around about here. Okay, so imagine buying something at 350 and then having it go up 50%, because this one's gone down by 50%. WiseTech's been in it for quite a while, YL and most of the coal stocks as well. Please, you have to tear down this wall of mistrust about short selling. It can go wrong, obviously, if they go up, but we have tools to manage that risk as well. Let us continue with your offline requests. Not that many more to go, and some of them I'm sure are online as well. BOE. San's just sent me this. San, I don't know why you want me to look at this. Are we talking about a short? Because it's getting close to its long-term downtrend ribbon. San, I can't spend any more time on this. There's a great show on Ausbiz. It's on lunchtimes. It's called Your Call, was it? I can't even remember. It hasn't been that long since I've been on it. What's not Your Money, Your Call? That's the other one. The Call. And you can call them up and ask about that, and they'll talk about shit that really is not meeting anybody's criteria. But Sam, I could only talk about a continuation setup, a turnaround setup, or an aggressive setup here. I'm not going to waste my time talking about your stuff that you're just interested in. I'm sorry, because that's not how we learn about the model. Mineral Resources, Sam, if you're asking me about this one for a short, I don't think it's far away. Next low close, I'd short this one, and certainly that's been in, I don't know, two dozen times at least for a short trade. But if you want to know, Sam, whether I think it's a buy, you're barking up the wrong tree. PMT, for it to be an aggressive setup, I need a base pattern, at least a few months base pattern, at least a couple. Let's go PMT, and I'm so confused by these three stocks, Sam. I have no idea why you're asking me about this stuff. I just don't get it. So without wanting without wanting to sound rude or anything, stop asking me about this stuff, Sam, please. You're wasting my time. GNG, and I can say that because guess what? You pay me. You pay me nothing. You're right. So I can say anything I want. This is my kingdom, ladies and gentlemen. GNG. I think this is, at least we've got a trend, and I think it looks really solid, but there's a but. I think when you zoom in, it changes things, doesn't it? And this is why we really should look at things with a consistent zoom, okay? Because I looked at that, and my first instinct is, no, I don't like it because this is too steep. Like, why did they sell that so vigorously? And not just why was there so much selling. I mean, look at the volume through here. Like, there's a lot of stock came out. Yes, there has to be a lot of buying that comes in, but the buying was running away. It was like, hey, hey, whoa, I thought it was cheap, maybe it's not cheap. I thought it was cheap, no, is it? No, I'm not sure. Okay, but the selling was confident, the buying was not confident. So they're really aggressive, and that worries me. I see a really steep sell-off like that, it puts me off. It's a V-shaped recovery though, so the demand has come back in as well. And then if you zoom in, it kind of flattens it out. It doesn't look so bad. So this is the idea of really sticking to your default zoom. And you only really need to zoom in if there's a candle that you really need to see. You can't, and then you should zoom out again. Or if you're comparing, if you're trying to find, I guess, stop loss points and things like that, finer points of detail. But really, your analysis first pass should be done here. Your gut feeling speaks a lot. My gut feeling says I'm going to need something more here. And I know I'm zooming in, but I need to show you some stuff. Okay, I need to see at least a dink on this one. It needs to be a very shallow dink. This is a great move. Don't get me wrong. I really like this. And what I would like even more is to see a very shallow supply, very shallow move, which would indicate that the supply side is not as vigorous as it was here. A shallow move would also indicate that the demand side is very strong, right? It's holding strong in the face of looming supply, and there's got to be supply up here. There has got to be a bunch of traders that got caught in this one up and around this area that want to get out now. Okay, so we want to see how they interact with the demand side and how their supply manifests itself in the market, and a shallow pullback would tell me that it's not so bad. Anything more than a shallow pullback, big black candles, lower peaks, would tell me that this is going to be an enduring point of supply. Okay, so yes, I can see why you're interested in it. Yes, it's got a long-term uptrend. Yes, it's kind of bounced off it. Yes, there's actually a V-shaped recovery, no doubt about it. Yes, there's some really good candles as well. Okay, but I need to see more at this stage. I'll keep an eye out for an example of how one sort of played out in the past in this nature, and I reckon I'll find one. So that one was for David. Let us keep moving. I've got some US ones there, but we'll do those later. Okay, let's head over to your online request. Thank you for being so patient. Avant saying, can you suggest a broker that we can use to short stocks? You could go to Think Markets, my old employer, if you want to. If they're still around, I mean, the reason why they got rid of me was because they were shutting down their Australian office, or downsizing it almost completely. So if they're still going, but they were the good people there, certainly. Otherwise, you got your big ones like your CMCs, your IG markets, and any of those. And yeah, I'm not. It's not really my place to say which one. Just do your homework and shop around, as they say in a current affair. Let's go to TLX plus 1/3. So we've done that for you, Avant. Let's go to Robert, KAR. Robert, I thought I might get a question about this today. And look, last time we looked at it, I said it needs to do a dink. The dink we talked about in the last example, different scenario, but the importance of the dink cannot be understated. Has it dinked? And what we could do to tell if it's dinked is go and put our peaks and troughs indicator on. But I think we'll find that this high here is lower than that high, but that low is not lower. So this is all part of the same move. So that's not a short-term downtrend, which means that's not a peak, which means that is not yet a trough. it's just hovering around. To be fair, these are indications of support being offered by the long-term trend ribbon. And yes, if you are really hot for Karoon gas, like you cannot control your urges, okay, then I kind of can't keep you out of it much longer, okay, because it's kind of doing the stuff that a turnaround setup should. But I looked at it today and I thought about it and I didn't even put it in the shortlist because I don't trust it yet. And it's not far away. I mean, give me a decent candle. That's what I want to see, a decent candle, an actual dink. But yeah, there's still something about this that tells me it's more in the ho-hum basket than something that's about to really explode. We also look at the sector. Like this, the sector is really encumbered at the moment, isn't it? So that leads me to believe that it's hard to see it doing something wonderful. But order of magnitude, if Karoon gas, as I said, for some reason, is the one that you like, that's what I'd need to see. Something decent, some decent upside price action. So if you've got it, hold it. I've no qualms about that on the basis that, yes, it is more and more looking like a turnaround setup. If you don't have it, you can buy it now. You can, because there's nothing to say based upon my turnaround setup you can't, but I need more. Let's go to NWC, which is New World Resources, and this is more of a turnaround setup, and that's sort of the candle, isn't it? That candle there, because this is just as sketchy in many ways as Karoon. But that's we want to see that excitement, that push, that pulse, that interest being shown by the market. We'd see almost double the average volume today, maybe even closer to triple. Very strong candle there. I think the price action could be better. I like this sort of price action, right? I think this is a little bit more overlapping. There's a little dink in there. But there's so much paper, I'm guessing, out on this one that it makes it hard. I mean, if you're looking at trading 20 million sort of shares, there's probably a lot of paper out there. So it makes it hard to have clean price action because there's huge lines of stock waiting at every level. But yes, it is a turnaround setup. Yes, that candle is the one for me, and I have no choice but to agree with you if that's what you're putting to me. FRP plus 1/3, full risk position if you have it, adding risk if you don't. Is this going to be the best turnaround setup we're going to see? Is this going to be the best small cap we're going to see tonight? I don't know, let's keep looking, but certainly meets my criteria for now. Absolutely. Let's go to AKM as a turnaround setup. Asks Michael. Yes, I guess it is a turnaround setup in that we've got an amber long-term trend ribbon. We don't have a short-term uptrend ribbon. I'd like to see that first. So I'd say that quite a bit more needs to be done. It's also quite sketchy for very different reasons. Not because there's huge amounts of paper out there. It's sketchy because probably very few people know about it or care about it, and that's why we've got very low volume. So you can see. Full candles that are just lines, for example. What does that mean? So, for example, that one there, where there's just a line that tells you that the open, the high, the close, and the volume close are all the same price, and the volume probably is very low. In fact, the volume is 805 shares on a 30-cent stock. So we're talking, a grocery run. Of stock traded on that particular day. It is problematic for me because they can be really hard to trade. I need more on this. That's what I said at the start. That's what I'm going to say again. Something like this, probably even a few rising peaks, rising troughs, but it's going to take that long until this short-term trend ribbon turns to up, isn't it? And starts to offer dynamic demand to the price. It's still too early for me. And, there's a trade-off. There's a trade-off in waiting for these things that I've proposed. You may have to pay a higher price, but you'll be far more confident that the demand side actually is in control. And if you can trade something where the demand side is controlled, you've got a much greater probability of success. That's just common sense. One of the downsides of waiting for all the stuff and being patient for all the stuff that I've talked about to occur is that I said that, I'm repeating myself, you could get in a higher price, but you have more confidence. I guess the opposite is get in now early, okay, and the advantage, that's what I meant to say, the advantage is that you will get a better price. I kind of screwed that up, but I think you got where I was going with that. Let's go to PTR. We're getting a lot of these similar charts today, but probably makes a lot of sense because, we've had this correction and a lot of great trends have unravelled. And now they're bouncing off their long-term uptrend ribbons. And now we're going, hey, Carl, is this a turnaround setup? And you don't see, is it fair to say that if you've been following my trend, my uptrend, downtrend list for a long time, you don't see a lot of these in there? Is that fair to say? After these sorts of species-ending events, okay, you don't see a lot of these in there. You see a lot sort of in these phases here, right? You see a lot in these phases here. Is that fair to say? Think about it now. I just want you to sort of picture in your mind, having looked at my watch list and going scrolling down the list. Is it fair to say you see very few of these? Okay, if you see maybe 7 out of 10 of these and 3 out of 10 of these, that doesn't leave many for this. It might be 1 out of 10 that you see of these types of setups. I put very few of those in because I don't trust them. It does take a hell of a lot more after a massive, massive species-ending event like that, such a well-defined top like that, sharp pullbacks, for me to become more enthusiastic on these as turnaround setups. It's not that it won't happen, it's just that I need to see just perfect price action. I'd like to see the short-term uptrend ribbon. I'd like to see it supporting price. I'd like to see good price action. I'd like to see a clear predominance of demand side candles. And I don't think you could argue, Michael, that those things are in place yet. Okay, we've got to start. We're trying to bounce off the long-term uptrend ribbon, but that's all we've got. And that's not enough for me because, and the reason is this, okay, this represents, this is what this represents. It's a wall of latent supply, okay? Latent supply. What is latent supply? It's supply that is not there yet. It's supply. It's contingent, isn't it? You call it contingent supply. It's contingent on the price getting back up there. Why is it contingent on the price getting back up there? Because that's where people got in. So that's where they want to get out at break even. And the more people that got in there and got stuck in there, the more people that will want to get out. And how do you know lots of people got stuck in? Because the size of the candles, the volume. So I want something easier than that. And that's too hard for me. PTR. EOS, not a turnaround setup. We really are getting confused over what a turnaround setup is. Let me reiterate because I do believe repetition is the mother of all learning. And maybe you have actually got me here at a technicality because we do need at least an amber ribbon. Okay, you got me on that one. We need a short-term uptrend. Well, actually, you got me on that one. Maybe I jumped to conclusions. We need strong price action. You got me on that one as well. We need a predominance of white candles. So, yep. This is actually a turnaround setup. But you can see it's fledgling in that we've only just transitioned to amber on that long-term trend ribbon. What is actually good about this, actually I'm liking this more as I look at it, is that we are bashing into a previous point of supply. And that's what turnaround setups are. We are inevitably now going to bash into points of supply. So they're not blue sky, nothing up ahead unless instead of outside of round numbers. I'm finding as I'm getting older, the words that used to be there are no longer there, unfortunately. Trades into red-ish. So that's good. We're bashing into that point of supply, and let's call that a POS. And capitals, please. And we're doing it with confidence, I think, and some good volume actually telling me I'm removing some supply there. The other thing is, I think, this is a fairly decent base pattern as well, don't you reckon? Like it's actually been working through this supply overhang for some time. And the longer you work through that, as you start to move to the top of it, the more confidence you can have that pesky supply, because supply takes time to exit the market. Supply takes time to be consumed. And this is why I often talk of base patterns in those aggressive setups where things have been beaten down for a long time. Think like Aldoro Resources, where it's gotten so far away from its long-term trend ribbon, you could spend 2-3 months going sideways, basing out, consuming that supply, demand coming in, new buyers coming in, and then you've still got upside into that trend ribbon. Actually, I think this is interesting. So I know I was quite dismissive of this, wasn't I, Michael, at the start? but the more I've looked at this, the more I'm encouraged by it. Would I put my own money on this? No, I wouldn't though. So it's up to you what you do with it. I can see there are some good things happening. What would it take me to get in? I was going to say something like, a little ding here. I don't think you need it, honestly. There might be a bonus. Strong candle, white candle close above that point of supply. And I'll just show you what it's going to look like. It's going to look something like this. And it's probably enough. It's probably enough. It would have to be, Michael, the absolute best setup on the day. Like, hands down. I'll get rid of these arrows now because they're in the way. Hands down. Without a doubt. Gotcha. Best setup on the day. Because even then, like, look up. And what's your upside until you hit this big point of supply? Okay, and then the next one and the next one. So, yes, I'm all for having turnaround setups, but I think we're trying to manufacture some. It's a warm one. I want to find a hot one, but go for it. I think go for it. We come here, we discuss. There's no, I never said it's a black and white system to you. I said, it's a common sense system. But for you, Michael, give it a go. I'm serious, give it a go. I know I'm not supposed to tell you what to do, but give it a go, if only just to see how this plays out. I have trepidations when I see charts that look like this and G or whatever it is, because I've seen how they've played out dozens, hundreds of times. So I have at this subconscious level these things that kind of hold me back from doing certain setups that you don't have yet. So do this one, see how it turns out. And I don't think that automatically means it'll be a bad one. I'm not implying that, but get a feeling, because if you don't do this trade, you'll just forget about it. And you'll never have that learning that, okay, that setup actually wasn't as optimal as taking a setup that maybe had a stronger move or further to its supply zone. Experience is a great guide, or making mistakes is a great teacher. I don't want to make it out like you're going to make a mistake. Okay, please don't stop the hobby. What's the hobby? I can't remember. Roscoe. Let's go to Sue. Sue say, hi Carl, can I please have your thoughts? How are we going for time? Awful as usual. We will stop when we get to reparment Droneshield. Hi Carl, can I please get your thoughts on Telix? Telix is very popular today, and that's good. I agree with you. It has such a great pedigree, and I think if for only that reason, it deserves our confidence. Let's go to ABB, which is Sue's second one, which has been in and out of the list, hasn't it? I think we had a pretty bad earnings report roughly here, unfortunately, because before that, it was a turnaround setup and it was starting to look good right there, not dissimilar to EOS. What might have made it a little bit more superior to EOS, Michael, is so obviously see how it's sort of basing? See that? See also it's got that base pattern. I love those base patterns. Yes, we started to get good price action like your EOS. Predominance of white candles. I think your EOS has better candles than this one. Well, this one had. Well, I'm pretty sure I put it in on that day. But where I think this one beats EOS, yes, because it's also meeting that points of supply. See, I love this. This is so neat that we actually can talk about this one straight after the other one. But we had much more room to move into that next big point of supply. Not that it mattered because it ended up with this. Now, what did we say? FRP? I don't know. I guess I'm surprised. After that candle, certainly not after that candle, because 24, I'd have to go check because there's no way I would have said after that candle. And let me tell you that the 24th of February was indeed a Monday. So you can see that we had that candle. Okay, let me point it out. So we had that candle when we looked at it, and I wrote those three letters. I did not yet have this candle. Okay, I can't tell the future. So I probably would have said something about, well, geez, what an amazing candle. It is indecision, not really a demand side candle. Oh, not even really a supply side candle. I know it's black, but look at this, got a lower shadow. What do? Not sure. Let's give it some, let's see what the next candle brings. What did the next candle bring? Almost total Armageddon. I don't know if you noticed I clicked on it. when I got here, because I wanted to see if I'd drawn in. Sometimes I draw in those big black candles, and I say, if you see this big black candle, then minus a third, right? Because I've written that down there. So I wanted to see if that was real, because it doesn't look real. I'm still trying to see if it's real. It is real. And obviously, when you see that big black candle, that's a species-ending event. Do not pass go. Do not collect $100 and be out of it. What about now? Sue's asking me about it now. I think we are getting closer. It's like GNG, isn't it? And that's okay. Look, hey, you ask the questions, and I'll do my best to give you a response. This is not even as severe as ABB in terms of that supply side move. These candles are far more severe. So we're waiting for it to prove itself. And it for me, I feel that there's so much supply, latent supply potentially in and around this area here, that we almost even need to deal with it. Maybe that's what I should have said on GNG, is that we actually kind of need to see even this sort of price action, because this is where the supply starts. So let's see what happens when we begin to interact with it. And you might say, Carl, well, I don't want to wait till 420 to buy. I want to get in here because all signs are that the demand's coming back in. I don't disagree with you. Like from here to here, it's almost bloody perfect. Like that's a really strong move in a pretty crappy market, in a pretty awful sort of tech sector. I know this is a bit more telcos, but what a very strong set of candles and price action. No, Carl, I disagree. I'm not worried about those giant black candles and all of that latent supply. I'm going to jump straight in. Okay, that's fine. And you're making that decision, eyes wide open. And take the trade, take the trade again and see how it turns out. Oh, that Carl, he didn't know anything. It was fine. Or, bloody hell, it got to 410 and then it just died. The black candles just cavalcaded in, and that was the end of it. There was just too much supply there. Geez, Carl was right. I should have waited. Take the trade, see what happens. Teach yourself a lesson. It's going to turn out the way it's going to turn out. The good news is, if you do take the trade, you've got so much good stuff up your sleeve, right? Green ribbons, great trend, great short-term trend, yes, great candles, great price action, and Carl's worried about that giant point of supply, okay? That's it. Same with GNG. I think these are really neat case studies as well, because you're going to see these. Now, this is kind of the kicker. Let me just see. Now, do I want to make this point or not? So let me go here. You can't see the pop-ups that are coming up on the screen, okay? And I just want to run this because I want to see if this came up in my scan list today. So I'm just going to run that again. And you'll see, this is what I do every night. I don't know, before I create my uptrend and downtrend list, I have a set of long criteria. I program them into AMI Broker. I say, hey, AMI Broker, over every stock, literally every stock on the ASX, tell me if it meets my long criteria. And it's 74% complete, which means it's probably done about 1,600 stocks by now. Now it's probably over about 2,000 stocks, and it's probably just finished its 2,400th stock. And then it gives me this list here, and I go right-click, I go add all results to a watch list. Actually, you can't see these pop-ups, I'm sorry, it's just the way OBS works. And I put it in a list, and I'll put it in here for now. And I go zoom normal, and I start at the top. That's gobbledygook, don't worry about that. That's a cash one. It's frustrating. It gets itself in every few days. How did AII get in there? Okay, it doesn't have a long-term trend. That's why it's not in a downtrend, because it's got amber, so that's got on there. That one's in there, and there you go. This is what I wanted to check. Was ABB in my list today? Because if it is, I looked at it today, and it didn't make my short list. Okay. And it's because I go through the list this quick. Okay, and I would have stopped a couple of times, but just showing you that's how quick I go through the list. So it's got that long. I hate that line's there. Go away. It's got that long to impress me. Is my point. So it's impressed you, Sue, and that's okay. But it didn't make my list, and because at a subconscious level, I go, keep going, boom, boom, boom. Now, you're not there yet because you haven't done this enough, and I hope that with ongoing practice and tutelage, you will get there. but just want to put it into perspective from what I'm looking at. Now, this doesn't mean that ABB will never be in my list. It will be in my list, I assure you, as soon as it does that stuff. As soon as it does that stuff, bang, it's in. Okay? We probably could do it, not these sessions, not at bloody whatever ungodly time it is on the East Coast at night, but we probably could do this maybe during the day, I don't know. Where we go through it, I think it'd really need exercise and, going through and see, well, what would I shortlist like? I mean, that got shortlisted the other day. It didn't get shortlisted today, that little upper shadow. I was being a bit pedantic. That needs a white candle. That one got shortlisted. That is still too early. No, that one needs a white candle, but was in yesterday. No, that one went in. No, not yet. Too early. No. Yes, that one went in. Yes, that one goes in. No, I need to see more. It's interesting, but it's a bit sideways. No. Oh, yes, that one's going in, and it did go in the shortlist. No. Yes, that one went in the shortlist. No. So some of you might say, oh, Carl, that's a turnaround play. Did we look at there? It is, EOS, look at that. So hopefully this is putting into perspective some of the stuff we do on Monday nights in general, where I labour on about, the ones that you picked and that didn't make my list. It's because they're not because they're bad. They're probably in here, but they just didn't appeal to me yet. Okay, yet is the point. No, I mean, what a great looking chart that is, but no, not today. Does it need my risk today or tomorrow, or more appropriately? No, it doesn't need my risk today. But if it throws the right candle tomorrow when I'm doing this tap, it will be in tomorrow's list. It gets the risk when it needs the risk. That made it in. No. What's that one? GNG. Oh, this is so enlightening. No, I skipped straight past that. It wasn't this. It's like, not because it's bad, not because it's not what I want just yet. And who am I to say that I'm better than you at picking these? I reckon I should have put that in. It didn't make it, but I reckon I made a mistake. I reckon that should go in. I know there's a little black candle. It's probably why I didn't put it in, but actually that's a nice long shadow, so I should have put that one in. I missed one. There you go. But I am going through this pretty quickly. Black candles. Oh, Carl, but what about that one? This one I spent a lot of time on today, and it very nearly made it in. In fact, if it had closed on the high, I would have put it in as a bit of a specky punt. But in the end, I just too afraid of this latent supply in here. I couldn't go on it. And this also just reinforces this idea of how few of these you actually see from me. Okay. And if you look at my watch list, I don't think you're missing much. You're not going, actually, I really missed that one that, not that you would know, but you don't worry, you're not missing anything by me not putting these in. I spent a bit of time on that one, and then I decided tap. No, not yet. And like that just needs another white candle, doesn't it? And when I get it, I'll put it in the list. Do I need to do anything with that tomorrow? No. There are other things. That one went in. No, that one went in. I thought about this one a little bit. Like decent at the end. Give me a dink. Give me a push into 150, a pullback, and then it will go in. That one just up a shadow. Kept it out. No, too sideways. I looked at that one for a second. No. Perth bin, pick your gold ETF. There's no point. You can't do them all. Pick your favourite one. That one went in. Sandfire Resources for obvious reasons. That one went in. That one needs a little bit more. One more day. No. I put that one in. Yeah, I put that one in but it got in. Look at the volume. There's a bit of interest there. I put that in a couple of days ago. It doesn't need to go in today. I thought about that one. We talked about it. I just decided not today. Doesn't mean it won't go in tomorrow. I put that in. No, I'm worried about that big point of supply. Great move, maybe on a dink. It'll change our risk reward. It'll give us a tighter stop. I don't even like that US dollar idea, forget it. No, sideways. Look, next white candles on a lot of these. But I can wait till tomorrow. But guess what? Because it's my job to be there tomorrow. Actually, probably should put that in now that I'm looking at it. Global Copper ETF. Not because of what it is, but actually that's a decent candle. It's doing a dink, sort of in the process of dinking, isn't it? At that point of supply. That one could have gone in today. I don't regret not putting it in. Next white candle, it will go in. It'll complete its dink. That's the bottom list. That's how long it took me to make that list. And then obviously once we have the list, as I find something, I right click. You can't see the menu. I go watch list, I go add symbol, and I tap down, and it ends up into the folder beneath it, and then I shortlist, and then it goes into every next folder, and then to the point where I'm certain that they are the ones that I will run as features. Just a bit of an insight. Now, okay, Carl, that was all very interesting. How do I do that? Okay, it's harder for you to do. You could go to TradingView, and I mean, I've got the luxury of being able to program Amy Broker. There are no programmable scans in TradingView. They just don't exist. You have some of their sort of lists, but they're completely useless. But what you can do is you can create a watch list, for example, of ASX 200 or 300 constituents. You're going to have 300 stocks to tap through, but you're going as fast as I just showed you how to do it, and being as ruthless as that, because if it's a good trade, it'll be there tomorrow and you'll see it. You could get through that list pretty quick, and you'll get through it quicker with practice. And you could find the ASX, you could find the All Ordinaries constituent list as well. Now, I'm not going to show you how to do that because I don't know. What I'm looking for here is I need to go back to here, and just go to one of these lists. But you know, make a watch list, and then you can tap down it, much like I did just then. Okay, and as big as you want to make the watch list is as many stocks as you can look at. Okay. The only other issue for you is that you're going to have uptrends and downtrends, whereas mine are just uptrends, aren't they? Because I've already filtered them in that way. Anyway, probably worth planting the seed in your mind as to how to go about it. Okay, that was a long-winded answer for you there, Sue, but hopefully it makes sense, and I've only gotten to APB on yours. So what do we got? How we go for time? Is where I normally say horrible for time as usual. Life's going to kill me. She's going to say, you need to finish by this time. Yes, I'll try. OCC, yes. Well, again, we have a theme every week, don't we? And tonight's themes are these trades where they're probably darlings of ours. We've probably traded them on the way up. We've probably made some money, probably got out quite a bit, and maybe haven't looked at them for a couple of weeks. But now we're seeing them go back up. We've got a bit of a love affair with them, and in many cases, for very good reason, we're looking at them. They're doing many of the right things. And we're probably also wondering why Carl hasn't put them in his watch list yet. Well, I've answered that question tonight, I think, beyond all reasonable doubt. It's because I treat them very, very carefully. Okay, it's not really a turnaround setup. It's not a situation where turnaround setups, I'm confident that we've exhausted all that long-term supply. Here we've got short-term supply. Okay, and I don't know how that short-term supply is going to play out. Is it the start of something that's going to become long-term supply? Because we saw so many of these other types of setups where short-term pullbacks are about to turn into something more sinister. Okay, look, not the case for OCC, EOS, EOS, maybe G&G, but yes, I'm still concerned. I'm going to just go ditto. Still concerned about this point of supply up here, and it might not be until. Oh, okay, good, thank you. Tell me, don't go in there either. Tell me as soon as possible, please. Thank you for doing that. I was talking about this one here. It is one of those ones where we have probably traded it on the way up. Okay, it's having a pullback within the long-term trend, and it's having one of these almost V-shaped recoveries. So it's one where I'm concerned about the previous point of supply, and I'd preferably want to see it do some work in there and prove to me that we have consumed that supply. The other reason why this didn't make the list tonight is this upper shadow here, which is starting to manifest exactly the supply that I'm worried about at this point in time. But I agree with you, like many others, up to that point, it's doing very, very well. It's a no for me. Let's finish this thing off as quickly as possible, please. We have done GDG from Joel, so that's good news. SX2 from Hoosel, we've also done ALL though. Doesn't ring a bell tonight. Let's see that one. Okay, this is interesting in that it hasn't had a bounce at all, has it? So it is a little bit too early. But it is going to, at some stage, if the bounce progresses, be in the same boat as the last one. At the very least here, Ursel, I need to see it trade above its short-term uptrend ribbon, probably do a little dink in there. And if it had the almighty greatest price action and candles in doing it, I could have a go. if at all of these, if you could get them a bit closer to the long-term uptrend ribbon, like if all of that stuff I just talked about can happen closer to the long-term uptrend ribbon, it is better. It is better than trying to get into them around here, which is most of the ones you showed me tonight are getting in around here, where you're just too close to that point of supply, really, to run the risk. But if you could get in sort of around here-ish, okay, you've got much more to go, right, before that point of supply really kicks in. So in that case, this one may end up being a better example of the quote-unquote long-term uptrend turnaround setups, if that even makes any sense. So it's still too early for me. I can see obviously what you're looking at, Herzl, but still too early to me. Now, having said that, you guys can do whatever you want, and this is one of those asymmetric payoffs, okay? So if you wanted to take the trade now, and by no stretch of the imagination could I ever advocate full risk position at this stage, this would be dip a toe in the water, and it might be just something like plus 1/6, okay, if you have to. Now, this is not me, by the way, but I just want to give you another alternative to investigate yourself, and this might become your best ever trading setup, okay? Because it is an asymmetric risk. If it goes wrong, you'll know it's wrong very, very quickly, and you'll be out of it very quickly. But if it goes right, potentially, if it moves back into that old uptrend, and don't forget, this was one of the best uptrends in the entire bull market that we had. Like, it has that pedigree, like Telix. At least you're getting a toe in the water early, okay? The toe could get cut off, but you know that could happen. And then by the time you do this little dink, you might be then adding a third to that, but at least you've got a little bit of risk on the table, and then so on and so forth. That's another alternative if you want to test that one out. Let us keep moving to JHX, which we were obviously talking about for a short trade. Vardy's saying it's a great case study for fundamental versus technical analysis. Well, I don't know the fundamentals of James Hardie, and that is a good thing. I prefer not to know the fundamentals of any company because in my experience, and my experience is long on this, I can tell you the more I have known about a company that I was invested in, obviously going back many years, the worse I traded and invested in that company because I couldn't sell it. Because I kept telling myself all the reasons why it was so good and convincing myself why I bought it in the first place and it was still good. And I also didn't want to seem like an absolute idiot as well because, I thought it was good. And what was I wrong? I can't be wrong. Surely I'm not wrong. I'm a very intelligent person. The more I knew about the stock I was invested in, the worse I did. And until I got to the point where I now know nothing. I'm completely oblivious. And that is a good thing. Let us go to, there would be fundamental value investors talking about moats right now, probably a moat on their t-shirt. That would be furious at what I just said. But to each his own. Let's go to Rupam, who's got Droneshield, which is supposed to be the last one, and it will be, and then we'll head back up and listen to US stocks. Tough one. I think we're pretty close to flattening out here. I don't think we're full risk position, are we, Rupam, after that candle and that candle? I think that's a pretty significant supply side response, so is that one. This was promising, but if you got in at the open of that trade that day there, and you're getting out here, I think live to fight another day elsewhere. This was always going to be a bit of a tricky one. If you don't want to go all out, if you don't want to go flat just means zero risk position, I think taking at least some risk off the table would be wise. That's what I think. Okay, let's working with peaks and troughs. Yes, and I'm still working on that for you there, Roscoe. Let us head back up the list. There weren't many US ones, so we're going to be done very, very soon. In fact, the only US one, I'm sure there were some US ones in here. No, I can't see them now. They're gone. No, they're not here. If they are, ask them again. I'll scroll down to the bottom and you can ask them because I'm going to head over here to the offline request where there are some, but I can't see any US ones there. So let's go back to Chrome and do some from Perry. I'm so excited to have Perry. He's been on holidays, but he did send me an email today and he said it's slim pickings, Carl, in the US. So if Perry's finding it hard to find setups, then it's hard to find setups. But he did have two for us today. Genius Sports, which looks like a typical sort of Perry trade, isn't it? Nice little base pattern that it's working through. It's consuming that supply that was there. A lot of interest coming into this one. We can see significantly above average volume more recently. Let's check the weekly chart and see if there's anything sort of sinister out there. Look, as a turnaround setup, or more of a turnaround setup when we look at the weekly chart. Closing above that point of supply, there's nothing really until we kind of get into this little trough here. That's 1432. That's miles away, but more likely the point of supply is up there around 20. So no, that's not a problem at all. So let's go back here and say, for all intents and purposes, for all we care about, it's blue sky through $10, which is important. I know it's not our first rodeo at 10, but it's good to be through that round number as well. A little bit overlapping on the price action, but not surprising given it's been trying to consume that big supply zone. So it's more of a sort of base pattern breakout. But otherwise looks very good, supported by the long-term uptrend ribbon. And yeah, as I said, volume's good. So nothing here at all. There's nothing here to tell me that I shouldn't do it, which means I should, which means FRP or plus 1/3 if you have it. If you have it or you don't have it. Let's click save on that one. Let's go to Perry's second one. Only two tonight, GEL. Do that. Go GEL, which is Genesis Energy. Interesting to get an energy stock. Interesting to get an energy stock that's doing so well, and it's doing extremely well, and that price action is perfect. Let's go back to the weekly chart to see if there's anything sinister going on out there. There is a little bit of sinister stuff going on. There's quite a decent point of supply here. From 2020 though, look, that's pretty old. I think if you're still in the market from over 5 years ago and you're still harping on about wanting to get at that level, I'd be very surprised. The other thing is we're closing right into it, so it doesn't look like the market's too fussed about it, if you get what I mean. And if I'm not mistaken, we are also doing a similar thing with 15 on this as we're doing with 10. So look, I'm fine with that. Very, very strong price action, strong motive phases. That's the move between the trough and the peak, and the motive phase, and a very, very shallow sort of reactionary phase there. That's from the peak to trough through here and through here. Candles a perfect little gap and run there as well. Trends are excellent. So I can't fault this one either. It's probably the stronger of the two, even though I know it's further away from the light green ribbon, and that scares some people, but it's more indicative of just total consensus and demand side control. So an absolute yes for me on that one. Perry saved away, and it'll be interesting to see how both of those play out. San has 3 here, hopefully closer to my system setups than the 3 Aussie ones he gave us. Let's have a look. MicroStrategy. Yeah, look, more of a turnaround setup, more of one of those long-term uptrend turnaround setups. San, look, not bad. Needs a little bit of work, but not that much more work. I mean, it's. I don't know if you remember back on the Aussie ones, I drew it's sort of a nice big white candle, and that's all it would take for me. Honestly, it wouldn't take much more in that because we are trying to bounce out of that long-term uptrend ribbon. Decent whack of white candles through here, back to high peaks and high troughs. Little point of supply here. Like I said, nice little white candle that's probably closing about 322-ish. Full white candle. Solid close. Let me just write that in for you. Next high close. I think it does need to be greater than 322, and then I could go a third on that one as a bit of a long-term uptrend continuation turnaround setup, if that even makes any sense. But it is, to be fair, kind of a mix between a continuation setup and a bit of a turnaround setup as well. So not too bad there. Let's go to Tesla, TSLA. Obviously been in the news a hell of a lot recently. I think it's just so silly what's going on in America with just poor innocent people that just happen to own a car, a lump of metal, okay, that has a badge on it, that are getting their cars, vandalised and burned. I just think that's so silly because of something else that somebody else did. Ridiculous. But there's no trade here, San. I have no interest in that one, sorry. If you want to know why, go and apply all of my trading rules. This one here, if you're looking at this one for a short, potentially, much like the last one we said, needs a nice big white candle. This one needs a black candle. And then, yes, I agree, actually, it's a very strong setup for a short. So let's go next. We need our drawing tool first. Let's go next low close. Next low close. Minus a third on this one, obviously. And look, probably towards, next low close. Let's say towards 35-ish or around 35-ish. It doesn't have to be below 35, but sort of towards $35. And then I'd be happy with shorting that one if that's what you're asking me about, Sand, but I'm not sure if you were. That is it for today. Double checking, we have definitely done all the requests. I don't think I saw any US ones online. In the back of my head, maybe I was just thinking about these offline ones. Let us head back over to here, and as the poster says, hang in there, everybody. Look, it's not such a bad market, isn't it? I mean, we've had a look at so many charts tonight, and there were lots of opportunities, I thought, both longs and shorts. So how is that a bad market? What we do need to do, I think, however, given the volatility, given the lack of consensus, and that's the key concept here, the lack of consensus. Trend traders make the most money when the market is in consensus. That's the easiest way because prices are moving with the least volatility. So when there's a lack of consensus, when there's indecision, uncertainty, obviously we've got traders heading both in and out of the market, and that creates volatility. So that's why we reduce our risk in these situations. Doesn't mean we can't trade. Obviously, we're still going to try and find the best individual setups, but we should have fewer of them overall to keep ourselves safe. All the best for your trading and investing, as always. Till we catch up again. Bye-bye for now.